Hey guys, welcome back to my channel, and we're going to go ahead and recap what's been going on in the market for March. So as you can see, not much has really changed with my portfolio in terms of investments, but a lot has changed with the sentiment towards one of my major holdings and also the market in general. So I'd love to talk about that more. Let's dive into it now. So, over the last month, you can see my portfolios remained pretty much flat as to where it was a month ago. That's because of my contributions mostly, because the market has been down by about 2.28%. So, the portfolio performance is actually down by 2.28%, which is down $2,154. Let's compare that to the S&P 500 I have right here, which you can see the S&P 500 is actually down 3.32%, which is $3,465 if I was completely invested in the S&P 500. So my picks have outperformed the market over the last month, and that's really good to see. Now, diving a little bit more into this, you can see I think over the last month, market sentiment has kind of switched. I think there is a lot more fear in the market than there was a month ago. People are a little bit more scared of where they're putting their money, and if there's a so-called or supposed AI bubble, I do think some companies are extremely overvalued, and I think some companies are extremely undervalued. So I do think it's up to the individual investor to find value in the market. I think investing in overall index funds will, like basically broad market ETFs that cover the whole market of US or Canada or even the world, still provide very safe and consistent returns if the time frame exceeds 10 years. I think the next 10 years to 15 years, we can still see that we'll have somewhat decent returns between 6 to 10%. So I do think that continuing to invest is the best choice for most people. But also, if you are picking individual companies, it's really important that we focus and choose companies that provide good margin of safety, but also a chance to have great returns in the climate of how the market is looking. Google. Man, I have a lot to say about this company. I still think it is an amazing investment and an amazing company. The company has been increasing in every single aspect of its growth, including search. And because the overall sentiment right now is that Google is not growing, that search is going to be replaced with AI and ChatGPT and Gronk and all these other different language learning models, LLMs that we have. I don't think that that's a consistent truth. I think in reality, like I use ChatGPT, I use these LLMs, and I feel like they have a very, very great use, but it's adjacent to Google. I still use Google. I don't think there'll ever come a day where I won't use a product like Google where I can search something and get my own queries instead of having a concise form of an answer. That's really good when I have a question about something that is not related to a tangible object, but when it's like a booking or when I have to get a show or a movie time or something like that, I think Google won't be replaced in those niches. So I think Google is going to adjacently also grow, and I think that'll surprise investors. That's one of the main reasons I think Google is really set to provide gains that exceed the market over the coming years. So I think I'm going to be holding on to my Google shares. I do want to buy some more. You see my cost per basis is 166 US dollars, and I do want to buy at 165. If it does get the opportunity to go around there, I will be looking to add maybe another 5 to 10 shares of Google. There's always going to be great buy opportunities, and I'm going to be looking to take those up and get good shares at good prices and have more of these great companies. Besides that, I'm going to be continuing to save up for my wedding this year. That's going to be my main focus. I hope you guys have a wonderful week, and thank you so much for watching.